China's been booming. And as China grows, or as the world grows, supplies get tighter, especially if nobody's been adding productive capacity. How many people called you in the last 20 years and said, I want you to invest in a cotton plantation? No. Nobody. They all wanted you to invest in a mutual fund. So there have been no new productive capacity added to cotton. Listen, 10 years ago, China exported oil. Now they import oil. China's the second largest buyer of oil in the world right now. And 10 years ago, they were exporting the stuff. As the world grows and as supply goes down, prices go up.
How long do you see this bull market for commodities running?
Historically, bull markets in commodities have lasted from 15 to 23 years. They've averaged 18 years. I don't know how long it will last, but according to history, that means this bull market will last until sometimes between 2014 and 2022. I have no idea, Karen, but based on history, we have at least another 10 to 18 years to go.
With the move that we've already seen in some of the commodities, particularly the metals and energy, where do you see the value now?
Well, you hit it. You pick the things that haven't gone up. It's the way any investor is successful. You buy the things that are down. Sugar is 80% below its all-time high. You look at things like soybeans. Soybeans are 70% below their all-time high. You remember beans in the teens?
I certainly do.
In the 70s, people used to say soybeans are going to the teens, to $13, $14, right? They never made it.
No.
They made it to $12.90. They never made it. That was close.
Right.
But soybeans, sugar, all of this stuff is way down.
I remember 40 cents a pound sugar, and you couldn't find sugar in restaurants.
I remember my brother brought me a 5-pound bag of sugars at a dinner party present one time because you couldn't get sugar, and it was so expensive. Yeah, he didn't bring any wine. He couldn't afford the wine either, but sugar was better. No, that will happen again. I remember when sugar was 66 cents, and for your viewers who don't know, sugar is now 9 cents. It's way down. But anyway, I'm not suggesting you buy sugar. I'm just saying that's where you look. You look at cotton. Cotton is 70% below its all-time high. Look at the agricultural product. At least that's what I'm doing. At this point in time, I'd rather buy agricultural products than metals or energy.
I know very often bad news means profits for commodity investors. Say a frost in Florida and ruining the orange juice crop, or a drought in the Midwest, and you have no beans or corn. We've just had a terrible Asian tsunami. Do you see any long-term economic impact from that?
I've looked. I don't see any at all. I mean, the people got wiped out. It's a horrible disaster, of course, but as far as the world economy, they weren't producers of many things. They weren't consumers of many things. I mean, the tourism industry is being devastated, mainly because the press is talking so much about the disaster that people aren't going there anymore, but apparently the hotels, for the most part, are okay. But to answer your question, no, I don't see much. But you are right about, a frost in Florida can make a lot of people rich. Can wipe out some people, but other people get rich. So you have to learn to think both ways.
Jim, we know that commodity trading or commodity investing is not for everyone. You have to have a certain, I say, suitability requirement or so. But there are ways for small investors to get in on natural resources and raw materials. And some of them are mutual funds. I know the PIMCO, Commodity Real Strategy Return Fund, that's one of them. Merrill Lynch has a commodity fund. JP Morgan Fleming, Investec. Companies like, mutual funds like those. What's your thought?
Well, that is a way, there's no question. Be careful, because most of the ones you mentioned actually buy stocks of producers of raw materials rather than raw materials themselves. And the studies show you normally make more with the commodities. Now, PIMCO does buy the commodities themselves. That is a viable option. But you have to remember, Karen, this is one reason I'm so bullish on commodities. There are 30,000 stock mutual funds in the world. There are only 3 or 4 commodity mutual funds in the world. That's because nobody is investing in commodities yet. That's going to change. Someday there will be hundreds or thousands of commodity mutual funds. And then it'll be time to get out of commodities again and go back to stocks or bonds or something else.
What protection or regulatory oversight do investors have when investing in commodities? Like for the stocks, you have the SEC.
Commodity Futures Trading Commission, which oversees commodity trading. And from what I can tell, they've done a much better job than the SEC. We all know about the problems with the SEC in the past 5 years. You haven't heard any problems coming out of the commodity regulators in the past 5 years, so both are controlled, at least as far as Washington is concerned.
But there were some problems. I can remember the Hunt brothers trying to corner the silver market
Karen,
and Simplot potatoes.
There have been some spectacular frauds in the commodity business. But let me tell you about Enron. Let me tell you about WorldCom. I can tell you about some spectacular frauds in everything, including TV, believe it or not.
No.
Yes.
Chair, it's always a pleasure.